Hey guys, it's Ryan here from Blockchain Markets, the channel where I share information about cryptocurrencies and my own research about different projects in the blockchain space. So today we're gonna talk about ICOs. I know that a lot of you have heard about ICOs, and then ICOs have usually a bad name because you have heard probably that there have been a lot of scams about this. People that sent the money to invest in a coin, and the money just disappeared. The people that run the ICO took the money and left. So what I want to discuss today is not that. I'll discuss that on another video. But today we can see what is an ICO first, and how to compare it with a normal way of raising capital. So especially interesting if you are an entrepreneur and you want to raise capital. This might be a way for you, maybe it's not. And then at the end, probably we can discuss a bit of how to avoid, as an investor, how to avoid situations where you lose your money investing in an ICO. So I thought I'll make a quick comparison between the normal way of raising capital and the ICO way of doing it. So until last year, probably a bit more, before this all started with Ethereum started as well. So then Ethereum, if you have seen my previous videos with Bitcoin, you cannot run ICOs, but Ethereum was the blockchain 2.0, which create a platform that allowed other companies to create tokens of themselves, coins. So you could actually sell those coins in the market. So and that's what we're going to discuss now. So what was the normal way to raise capital for startups, especially for tech startups? So first you would get an angel, right? Your friend, your family usually would give you a bit of money so you can survive or last a bit longer. Meanwhile, the project is getting developed. Meanwhile, you're getting the first clients in. Then afterwards, you go, if it was successful, you can, and you get some traction, probably you go to a lot of venture capitalists firms. And then it's difficult for them to they're very competitive and they're looking for the best, but you might get someone to invest in your company, and that's, of course, they take both angels and VCs. They take a portion of the company. They take a stake, so they have they become shareholders of the company. In some cases, they could become even shareholders, bigger shareholders than you as a founder. But that's another story. So you start with angels, then you raise a bit more money with professional investors, with VCs. Then you probably run out of money. You need to grow the team to get to start developing faster and better software. So you have to hire new developers. You need to get a bigger working space. So for that you need more money, and probably you go through a round 2, round 3 with the same VCs or new VCs, for example. And then afterwards, if you grew a lot, you have 2 ways. One, selling your company, so it's an exit. You can sell your company to a bigger company, or you can just go for an initial purchase order or an IPO. So you go to the stock market and you sell your shares in the stock market. So that was the normal way of raising capital and growing companies, especially tech companies. Now, how is ICO different? ICO stands for initial coin offering, and it means basically that you can create your own coin. So that's the way you fund your project, your tech startup, or startup in general. So the problem with this was that because it's so simple, there were a lot of people that didn't even have a company, didn't have a product. They just had 2 or 3 people with an idea. They would just create a white paper, and the white paper they would just put what their vision was, some mock-ups, and they would just issue the token, and they got funded. And that happened many times. So as I speak, there are a lot of people that are getting a lot of money for coins that are useless. Now, having said that, they have no, as I said, useless. They have no utility. Now let's discuss about the ones that are interesting, the ones that are serious. So there are other projects that also have a white paper. And then for you as an investor, what you have to do is you check first the team, how experienced the team is. So in that case, you just become like another investor, like you follow the same criteria you would do as an angel investor in a normal company, or if you buy shares of a company. You go to let's say Apple, and then you check who the management team is, how the finances are doing, how the products are doing, how the sales are doing, what's the short-term and long-term view, and how they're going to be better than the competition. Where in this case, a lot of people just didn't even think about that, and then just bought the hype. They bought paper that said we're going to be the next big thing. And that's how a lot of people lost money on it. Now, a way that you can avoid that is just to take it seriously. So you check the white paper, you check also what in the white paper, if the idea it's interesting or not. Confirm that with other people, tell friends or go to communities, check their Twitter and see, and check especially Reddit as well, Big Talk, and see what other people are talking about it. What do they think of this idea? Is it only an idea, or do they have already a working product? If they have a working product, the chances of getting scammed is way less, because you see that it's a real company behind. Now, going back to the process, so if you're on the other side, if you are a startup that is planning to get funds so you can go to the next level, usually you have to think this. Usually companies that get finance through ICOs are blockchain projects. So if you don't have a use case where you can apply blockchain to your business, I wouldn't consider it. Now, if you have, let's say, you're creating a marketplace, or you have a marketplace, let's say you create a marketplace where you can hire freelancers, and then in that, there is a utility for a coin. If you create your freelancer coin, and then people would actually use it. They would use it to pay to someone else, and then that person would get paid in your coin. So then there is a utility. That's very important. That it has to be useful. It has to be a purpose for that coin. And then what you do is that you start the whole process, which is much more detailed that I can talk in this video. But basically, you run your ICO on Ethereum or on Neo. You can do it as well since yesterday. It's also possible to do it on Cardano. So that's basically the main differences. I would say if you can take one thing of these two, is that the process of raising funds with an ICO is way easier than it is on the normal procedure. And it's also way faster. And you get funded not by one person, but you get funded by a lot of people. So what you do is you set up a landing page. In that landing page here, you say, well, I'm planning to raise 10 million. Now, please also be serious about this. I'm not saying that you should start a paper company and then just raise. No, that's not what I'm saying. What I'm saying is, if you have a startup and if you genuinely want to become part of the blockchain space, and then you think there's a real use case for blockchain, for using blockchain in your business, and because of that you need to get new developers, and you need to just get funds to grow, then yes, then an ICO is a good way to do it. So we're talking about serious companies here, not paper companies. So you issue your white paper. Usually you put it in the you'll see this on any ICO. You just have to put it, of course, so people know what they're getting into, what they're investing in, and also you don't have to give away shares. You don't have to give away a stake of your company, which is also good. So that's it, and then what you get back is Ether or Neo, depending on the platform where you're running it. So normal versus ICO way faster and less complicated. You get it from more people fund you, and not professional investors, but more normal people like you and me trying to invest in something that would increase in value in the future. Now, once you issue the token, and then after usually like 3 weeks, after a month, if I invest in an ICO, I'll be able to, let's say this was a M coin, marketplace coin, then I'll be able to sell that coin in exchanges. And that's the way I can change this for Bitcoin, my coins for Bitcoins, or anything in the exchanges. So that's it. If you have any other questions, just let me know in the comments, and then subscribe if you want to get more videos on cryptocurrency and blockchain projects in general. Cheers. Bye.